StockStudio, where rigorous information meets intelligent humor. Welcome to the deep dive. Okay, so today we're digging into Visa Inc. That's ticker V for those following along. We've got some great analysis here, particularly a Morningstar report dated April 29th, 2025, and some other bits from the vive.pdf you shared.
That's right.
And let's be honest, the market feels, well, pretty confusing sometimes, right?
Definitely does. A bit choppy.
So our mission today is clear. Cut through the noise, look at this analysis, and figure out what it tells us about Visa's current valuation and, its future prospects.
And from that, maybe sketch out a potential investment approach.
Exactly. Let's get some actionable insights. So where do we start? Valuation.
Yeah, let's start there. So the data point we have is from April 28th, 2025. Visa's last price was $337.51.
Okay, $337.51. How does that stack up?
Well, compare that to Morningstar's fair value estimate. Now, this was from a bit earlier, December 13th, 2024, mind you, but they pegged it at $289.
Ah, okay, so quite a gap.
There is. Doing the math, that puts the price to fair value estimate, or PFVE, at about 1.17.
Meaning it's trading, 17% above what Morningstar thought it was worth back in December?
Precisely. Trading at a premium.
So the market's optimistic. What did the latest analyst note, the one from April 29th, say about this? Did they update their view?
They did comment on it. The note basically confirmed that view, calling the shares modestly overvalued.
Modestly overvalued.
Okay, but, it wasn't all doom and gloom. They also highlighted a pretty steady performance in the fiscal second quarter.
Oh, yeah. What were the numbers like?
Net revenue was up 9% compared to the year before.
That sounds pretty solid.
And actually, if you look at it in constant currency, stripping out exchange rate effects, it was even better, 11% growth.
Wow. Okay, so the underlying business is churning along nicely.
Seems like it. They mentioned consumer spending looks stable, which is good for Visa, obviously.
But there's always a but, isn't there?
Well, yes. They did flag some near-term uncertainty because of potential tariffs.
Right. Tariffs, always hovering around. So, short-term picture, good performance, but maybe a bit expensive, and keep an eye on tariffs.
That sums it up pretty well.
What about the longer view? That December report you mentioned, did it talk about the fundamentals?
Oh, absolutely. And this is where Visa's strength really comes through, I think. The report talks about Visa having a wide economic moat.
Ah, the moat. Love a good moat discussion. What gives Visa its moat?
It really comes down to two main things: the network effect and cost advantages.
Explain the network effect for us.
Sure. It's simple, really, but incredibly powerful. The more people who have Visa cards, the more valuable it is for businesses to accept Visa.
And vice versa. The more places that accept it, the more useful the card is for consumers?
Exactly. It creates this cycle that's very hard for competitors to break into. It just keeps reinforcing itself.
Okay, makes sense. And the cost advantages.
Think about the sheer scale. Visa processes trillions of dollars in transactions globally. They've already built this incredibly complex, efficient network.
So the cost per transaction is tiny for them.
Right. For a new company to try and replicate that infrastructure, the cost would be enormous. Visa has a huge head start and scale advantage.
So strong moat. What about growth prospects long term?
Well, the report suggests there's still a long runway for growth in electronic payments overall.
Even in places like the US or Europe where cards are common.
Maybe growth slows a bit in those developed markets, sure, but think globally. Emerging markets are still shifting rapidly towards digital payments. That's a huge opportunity.
So the shift from cash is still a major tailwind.
It has been historically, yeah. And they also got a big boost from the recovery in cross-border travel and payments after the pandemic slowdowns.
Is that cross-border boost still going strong?
The report suggests that particular tailwind might be fading a bit now, kind of normalizing.
Okay.
But even so, the overall expectation is still for low double-digit revenue growth over the long term.
Low double digits consistently. That's pretty attractive.
It is. And they also expect some modest margin expansion over time. So getting slightly more profitable.
Okay, so putting it all together, wide moat, still decent growth prospects, especially globally. Sounds like a quality company.
Definitely has the markers of one.
But back to that valuation. Currently, modestly overvalued. So if you're an investor looking at this analysis, what's the strategy? How do you approach it?
Right. That's the key question, isn't it? Given that premium, the analysis really suggests a, cautious approach initially.
Meaning, don't just dive in right now at $337.
Probably not with your whole intended position, no. It might be smarter to sort of watch and wait.
Wait for what? A pullback.
Ideally, yeah. Monitor the stock price,
Yep.
see if it drifts back towards that fair value estimate Morningstar gave, that $289 mark.
Okay.
And, Morningstar also gave Visa a medium uncertainty rating on that valuation.
What does that mean in practice?
It means the analyst thinks there's a reasonable range around that $289 number. So waiting for a price not just at $289, but maybe even a bit below it, that gives you a greater margin of safety.
The classic margin of safety. Buy it for less than it's worth.
Exactly. Building in a buffer in case things don't go quite as planned or if that fair value estimate isn't perfectly accurate.
So patience is the first step. What if the price does start coming down? Do you just jump in then?
You could, but trying to time the absolute bottom is, well, notoriously difficult.
Tell me about it.
So another strategy this analysis might support, if the price becomes more attractive, is dollar cost averaging.
Ah, okay. Explain that quickly.
It just means investing a fixed amount of money at regular intervals, say once a month or once a quarter, regardless of the stock price at that moment.
So you buy more shares when the price is low, fewer when it's high?
Precisely. It smooths out your average purchase price over time and takes the emotion out of trying to perfectly time your entry. You gradually build your position.
So this whole approach, being patient, waiting for a better price, maybe dollar cost averaging, and that sounds very long-term focused.
Absolutely. This strategy is really geared towards investors who believe in that long-term story. The continued growth of digital payments and Visa's dominant position, its wide moat.
Okay, that makes sense. Patience, potential entry near fair value, maybe DCA, focus long-term. What specific things should we be watching then if we're considering this? What are the key risks or indicators?
Good question. The analysis points out a few key things to monitor. First, Visa's fortunes are pretty closely tied to overall consumer spending.
Especially discretionary stuff, right? Like travel.
Exactly. So any signs that the consumer's pulling back, that spending is weakening significantly, that would be a major headwind for Visa. That's a big one to watch.
Okay, consumer health. What else?
Those tariffs we mentioned earlier. That uncertainty noted in the April report is definitely something to keep an eye on. How might they impact cross-border transactions or overall economic sentiment?
Right, the tariff wildcard again.
And then there are always potential regulatory risks. The bears say section in that older report did mention potential lawsuits and regulatory scrutiny. That's kind of an ongoing background factor for payment networks.
Yeah, that comes with being dominant, I suppose. So watch consumer spending, tariffs, and any big regulatory headlines.
Those seem like the key factors highlighted by the analysis, yes.
All right, so let's recap the strategy. Visa, strong company, wide moat, good long-term prospects, but currently looks a bit pricey.
Modestly overvalued, yes.
So the plan is patience. Watch for a pullback towards that $289 fair value, maybe even lower for a margin of safety. If it gets there, consider easing in, perhaps using dollar cost averaging, all with a long-term view.
That captures the essence of it, based on this specific analysis.
Okay. Now, speaking of things being potentially overvalued or maybe waiting for the right price, I heard a joke the other day.
Oh, yeah? Let's hear it.
Why did the investor break up with the stock?
Uh-oh. Why?
Because it wasn't meeting their expectations. It was overvalued.
Huh. Okay. That fits the theme.
A little financial humor for you there. All right, so wrapping up our deep dive on Visa, the core takeaway seems to be thoughtful patience. Focus on the long-term fundamentals, but wait for a potentially more attractive entry point given the current valuation.
Sounds about right.
And remember, everyone, this discussion is based on the analysis we had primarily from April 2025. The market changes constantly.
Absolutely. Things can shift quickly.
So we always encourage you, do your own homework, dig deeper, and really think about your own financial situation, your risk tolerance, and your investment goals before making any decisions.
Crucial advice. It's your money after all.
Indeed. Now go forth and invest wisely with both insight and a smile.